The UK tax system is a total mess. So in this video, we're going to go through why the tax system is so broken. And this is the same system that meant that the former Prime Minister managed to make 2.2 million in a single year, but only paid an effective tax rate of 23%. But in order to determine if the UK has a bad tax system, we really need to understand what makes a good tax system. Now, there are a few ways to do this, but we're going to go with one of the simpler methods, which is that a good tax system should be effective, neutral and progressive. An effective tax system should generate enough revenue to meet the government's spending needs without excessively distorting economic activity. Neutral means that taxes shouldn't favour or penalise specific industries, people or income sources. This ensures that resources are allocated as efficiently as possible. And finally, progressive, that higher earners should pay a higher proportion of their income in taxes compared to lower income earners, and this helps to reduce income inequality. But the big problem is when we start to look at the specifics of the UK tax system, we find that the system falls woefully short. So let's just take a few examples and really analyse them to see how the UK tax system is really just not up to scratch. So let's start off with an easy one. We mentioned at the start that Rishi Sunak made £2.2 million last year, but only paid a pretty low effective tax rate of about 23%. And that is because the majority of his income comes from capital gains, and this dwarfed his salary that he made as PM. And this is an important starting point for us. For the last 40 years, the focus has been to move away from taxing wealth and to focus on taxing income instead. In the UK, income is taxed differently to wealth, and this is because tax can be paid at source for salaried employees. But whilst it might make it easier to collect taxes, it has an economically disruptive effect on the composition of the taxes that are actually being collected. Take a look at this. The capital gains tax rate is usually about half what it is when compared to income tax. But it's also worth noting, only the top 1% will generally pay any kind of capital gains taxes. And this leads to a compounding effect, which means that the people who own assets can use the income from those assets to accumulate more assets, but most importantly, at a faster rate than those who rely on income. We can look at another example of how the UK system is broken, and that's council tax, which is one of the most regressive taxes imaginable. And there's plenty of empirical literature dotted about the self to suggest that it's a pretty useless tax as well. But one of the reasons why council tax is so regressive is because it's capped. Houses are placed into council tax bands from A to H, and based on their value in 1991, just an insane way to look at property tax to start with, but that's another video for another day. Whoever came up with that one had the IQ of the temperature in the room at the time, in Celsius rather than Fahrenheit. And let's just look at an example of how regressive council tax is. If you live in Burnley, one of the poorest parts of the UK, then you pay about 1.1% of the value of your home every year in council tax. But if you're in central London, Kensington and Chelsea, Westminster, Mayfair, you'll only pay about 0.1% of the value of your home in council tax every year. So this means the council tax burden is about 10 times higher in poorer areas of the UK than it is when compared to some of the richest areas in the UK, let alone some of the richest areas in the world. But this also means areas where house prices have increased have meant that these places are getting a better deal than some of the less affluent parts of the UK. So we've also discussed that taxes in the UK focus on income rather than wealth. We've also looked at how even when the UK tax system does tax wealth, it's done in such an inefficient and convoluted way that even the wealth taxes in the UK are regressive. Next up is stamp duty, which is another truly terrible tax, and polling shows it's also one of the least popular taxes in the UK. And some of the problems with stamp duty are that it reduces transactions by adding an additional tax per transaction. It distorts the housing market, where houses invariably end up being overpriced or underpriced around the stamp duty thresholds, and it often stops people wanting to move, leading to an inefficient allocation of houses. So people who are older and living as a couple or even alone stay in houses that are way too big for them because they don't want to incur a costly stamp duty bill. Stamp duty also makes it harder to borrow from a bank because it's deemed to be a lost value. All of this reduces labour mobility, it results in the inefficient use of land and plausibly holds back economic growth. Next we have VAT. Frankly, this is where just shit gets weird. Here are just some of the absurd VAT rules that people and businesses have to follow. Popcorn is taxed at 20% VAT, while microwavable popcorn is taxed at 0%. Gingerbread men with chocolate eyes are VAT free, but those with a chocolate belt are taxed at 20%. Cake is considered to be part of the basic necessities of life, so cakes aren't taxed, even when they're covered in chocolate. And frankly, this led to the famous case and the whole fiasco of the Jaffa cake, which was eventually ruled to be a cake and therefore 0 rated, largely because it goes hard when it's stale, like a cake, not soft, like a biscuit. Truly ridiculous. But whilst all these instances make for amusing anecdotes, what does this really tell us about the tax code? Well, mostly that it's set up to be absolutely incomprehensible, a rich cacophony of stupid and facile rules designed to keep accountants in jobs. And there's one last thing I want to talk about, which are fiscal cliffs. This is where earning more money actually makes you worse off, and this can be through a combination of having to pay more in income taxes, but also potentially through losing access to certain benefits. Let's look at a couple of examples. So in the UK, we have free childcare for children under 3 years old, but that ends once one person's income in the household hits £100,000. Childcare is expensive, and it's perfectly possible that a parent with a couple of children are better off earning £99,000 than earning £130,000. And we should also point out that a couple who make £60,000 each will still have access to this benefit. But it's not just high earners. Further down the income scale again, well over 500,000 parents with incomes between £50,000 and £60,000 face marginal tax rates of 55% or more, because child benefit is now taxed away as income rises between these 2 points. Someone with 2 children faces a rate of around 60%, and if you have 3 children, the withdrawal rate rises to 70%. We should also note that these changes were recently increasing the threshold to £60,000. And it's also worth noting, you start to add your student loan on top of this, and 9% effectively a graduate tax, then you start to get truly astronomical levels of marginal income tax once you add the 9%. So if we go back to our original 3 criteria, do we think that the UK tax system is any good? Well, let's start with effective. I think it's pretty difficult to make a case that the UK tax system is effective, whether it's the misallocation of houses through stamp duty or the regressive nature of council tax. It fails this test. Neutral definitely fails this one, with particular income types being treated differently, like the income tax and capital gains spread and the complexities of VAT. Progressive, again, another solid fail. Whilst it's fair to say that people in higher tax bands pay more in taxes, the presence of some of these fiscal cliffs that we've discussed makes for a very uneven distribution. But how did we really end up here? There's a lot to unpack there, and maybe that's for another video, but one definite answer is that successive governments have not been keen to increase the headline rates of tax. So instead they've elected to tinker around the edges with exemptions, loopholes, clauses, bylaws and downright dumb changes. So in conclusion, there's much talk in British politics of whether taxes are too high, too low, but nothing like enough about whether they're well designed. At every turn, poor design distorts taxpayers' incentives to work, spend, and is eroding productivity and leaving the country poorer.